Jerome Powell, no big deal. We're in for a soft landing. The economy's not vulnerable right now. He's showing that steady hand. Everything's just fine. Let's see what this man's talking about. Bill Martin, Federal Reserve Chair for almost 20 years until 1970, famously quipped that the Fed's job is to take away the punch bowl just as the party gets going. Powell, we're in for that soft landing. So after the biggest interest rate increase in 2 decades, Powell also made it sound like everything is going swimmingly so far, with oil prices continuing to spike, driving the fastest inflation most Americans have ever seen in 40 plus years, worse than the 70s. It's important that he sounds in control, a steady hand, resolute, confident. He's taken action, yet isn't rash. His hand was shaking there on the podium if you watched the press conference there. So the Fed raises interest rates by 0.5 point for the first time in 20 years as it ratchets up inflation fight. The 50 basis point hike, a widely anticipated move, put the key benchmark federal funds rate at a range between 0.75 to 1%, the highest since the pandemic began 2 years ago. Powell said additional 0.5 point rate increases will be on the table at the next couple of meetings, but the officials aren't actively considering 75 basis point increase right now. Right now, I stress that. The Fed also announced that it will start reducing its massive $9 trillion balance sheet, which nearly doubled in size during the pandemic at the central, as the central bank, bought mortgage-backed securities and other treasuries to keep borrowing cheap. So in a plan outlined Wednesday, the Fed indicated that it will begin winding down that balance sheet on June 1st at an initial combined money pace of $47.5 billion, a move that will further tighten credit for U.S. households, folks. It will increase the runoff rate to $95 billion over a 3-month period. Essentially, from analyzing the data and what the economists are saying, this will be quantitative easing in reverse. So the Fed created the unprecedented stock market bubble that we have now, by pumping trillions of dollars into the financial system, and now they are threatening to burst the bubble. So, and all of this comes at a time when stocks have already been falling precipitously. Stocks are off to their worst start to a year in decades, folks, in decades, if you go way back. And, the Fed seems to think that this is the perfect time to make things even get worse. What in the world are the experts at the Fed thinking? The Fed's got more economists, if you don't already know, working for them than anyone. And should the fact that the U.S. economy actually contracted, the U.S. did a talk on this, the U.S. economy contracted during the first quarter, actually surprise any of us that actually happened. Since the start of 2022. There has been one crisis after another, and now the war in Ukraine is depressing economic activity all over the planet. We're shelling out maybe, billions of dollars to Ukraine that we don't have. What we are facing could most definitely be described as a perfect storm, folks. And the truth is that this storm isn't going to go away anytime soon. If the U.S. economy shrinks again in the second quarter, that will officially meet a definition of a recession. But hey, it's no big deal. It's no big deal. John Williams of Shadow Stats has pointed out, and if honest numbers, and other people have pointed this out too, I like to look at both sides of things. If honest numbers were being used, in his opinion, the U.S. economy would still be in a recession that started all the way back at the beginning of the COVID pandemic. And these are interesting stats, and other economists have looked at the unemployment numbers. And when you look between the lines of that information, it's very shady. So Powell acknowledged there could be some pain. He at least acknowledged there could be some pain associated with reducing inflation during and curbing demand, but warned the bigger threat is entrenched inflation and pushback against concerns of a looming downturn, in his opinion. He said it's a strong economy. He said nothing about it suggests it's close to a vulnerable right now to a recession. So he's bullish. Everything's fine. So, his hand was shaking on that podium. Do you raise interest rates when the economy is already falling into a recession? What do you think? What do you think about that? The U.S. GDP contracted during the first quarter of 2022. And like I said, if it contracts in the second quarter of 2020, we will officially confirm that we are already in a recession right now. Any central banker worth their salt that would choose to raise interest rates just as a new recession is starting is absolutely, might be somewhat crazy. But the experts at the Fed decided to go ahead with a 50 basis point rate hike on Wednesday anyway. This was the largest rate hike that we have seen since the year 2000, and it appears that more rate hikes are coming later in the year. The officials at the Fed can see what is happening, folks, but they are desperate to get the inflation monster that they played a major role in creating. Just the facts. And they're trying to get it under control now. So this move will have enormous implications for the housing market, okay? Just as we have reached the peak of yet another housing bubble and foreclosures are starting to surge. I did some talks on this. Yes, they were suppressed because of the moratoriums, and so it's no big deal. There's going to be an uptick. But look between the lines of the defaults. There's some warning signs and triggers. Not to panic yet, but Powell and his minions had decided to unleash chaos. And you remember 2008? Well, if officials at the Fed keep raising interest rates, we could be in yet for another crisis in the housing market, and even worse. Like I said, when those rates go over 5%, based on the debt that we have and things going on, it's concerning. So at this moment, inflation is drastically, and it's not just drastically spiking all over the globe. We are witnessing the largest land war in Europe since World War II, and the UN is telling us that we are heading into a horrific worldwide food crisis. And we all know about those plants mysteriously blowing up all over the country, the food plants. That's interesting. So they're worried about impending global famine. A horrifying bird flu pandemic and rapidly deteriorating economic conditions are happening right now all over the planet. So there are a lot of concerns. And an increasing number of Americans are starting to realize that things are moving in the wrong direction. In a Gallup April survey, only 18% of Americans rated economic conditions as good, and only 2% rated them as excellent. So there are a lot of moving parts right now with Ukraine, the inflation, and we're going ahead and raising rates. I think rates should have been raised a long time ago. We all remember the 80s, healthy economy. Rates should be over 10%. We've been spoiled. And that's another talk for another day. But it's very concerning right now. As far as the housing market, still a great time to sell a home. And if you have a creative real estate broker, there are deals out there to be had. Absolutely 100%. Yeah, you're seeing a tick off, and of course, and what's going on with the interest rates hike, but there's still good buys out there. Historically, rates are still low, and investors are buying multifamilies in all the states that I'm watching, and there's still competitive bids out there. But this inflation monster, and I understand somewhat what the Fed is trying to do, but it's very concerning. Based on the debt, where interest rates go if they go over 5%. If you follow this stuff and look into the micro data and the unemployment numbers, the real numbers, and other things going on right now. So just an update on that. get your thoughts on that. And have a great week. Be creative, be kind, and focus right now. Take care.